Every day for the last long period of days, the stock market, meaning companies, have been hitting new highs.
The stock market reached yet another all-time, in history, all-time high today.
Investing in real estate versus stock market. We've all heard the saying, good things come to those who wait. This can be applied to investing, where you can choose to buy the stock of a company you think will be successful over time, or invest in real estate. Real estate or stocks? Stocks or real estate? That's the question so many of us want to know in order to get rich. Historically, both real estate and stocks have been great investments. Whether planning for retirement, saving for a college fund, or earning residual income, most of us need an investment strategy that fits our budget and needs. Comparing an investment in real estate to buying stocks is a good place to start, which forms the basis of our video today. If you're hoping to be the next Warren Buffett of stocks or Donald Trump of real estate, I suggest you be our guest for the next 10 minutes or so. But first, a question. In your opinion, which asset class has produced better returns over longer periods of time? Real estate or investing in stocks? Let us know in the comments below. Now let's look at investing in real estate versus the stock market. Investing in real estate or stocks is a personal choice that depends on your financial situation, risk tolerance, goals, and investment style. It's safe to assume that more people invest in the stock market, perhaps because it doesn't take as much time or money to buy stocks. If you're buying real estate, you're going to have to save and put down a substantial amount of money. If you invest in real estate, you're actually purchasing tangible physical land or property. Investing in stocks is entirely different. If you buy shares of a business, you buy a claim to a piece of the company itself. The risks associated with each investment type differ. When you own real estate, you incur maintenance costs, capital costs, and maybe development costs each month. That said, the values of physical assets are less likely to become worthless than stocks. Many investors are more comfortable with real estate investments because they're real. You can touch, feel, and inspect the property that you own. Additionally, as the property owner, you have more control over the value and use of your investment than the standard stockholder does. Real estate investments fall in two broad categories: residential and commercial. Residential real estate includes all single-family units, buildings meant for 1 to 4 families, cooperative units, and condominiums. Typical investing strategies include land development, home flipping, or acting as landlords for rental purposes. Commercial real estate investments focus on land or buildings that have profit-generating activity and generally have higher startup costs than residential investments. Rental properties housing 5 or more family units are considered commercial as well. Most commercial real estate owners generate income through rent from office and retail space leases. On the other hand, outside of preliminary research to determine which to purchase, investing in stocks doesn't require much work on your end. Stocks are really just pieces of legal title that operate as claims to company profits and possibly dividends as they're realized. You are not an employee of the company, nor do you participate in nearly any management decisions. To this extent, stocks represent a more manageable investment, but they leave you at the mercy of others' business prowess. Stocks are more liquid assets than real estate. It's easier to buy and sell shares than it is to list and sell a property. Even though you can borrow against both investments, it's easier to borrow against stocks. The advantages of investing in real estate are vast. First, it's easy to understand. While the home buying journey can be complicated, the basics are simple. Purchase a property, manage upkeep and tenants if you own additional properties beyond your residence, and attempt to resell for a higher value. Also, owning a tangible asset can make you feel more in control of your investment than buying slivers of ownership in companies through shares of stocks. Secondly, investing in debt is safer with real estate. Also known as your mortgage, you can invest in a new property with a 20% down payment or less and finance the rest of the property's cost. Investing in stocks with debt, known as margin trading, is extremely risky and strictly for experienced traders. Thirdly, real estate investments can serve as a hedge against inflation. Real estate ownership is generally considered a hedge against inflation, as home values and rents typically increase with inflation. And lastly, there can be tax advantages to property ownership. Homeowners may qualify for a tax deduction for mortgage interest paid on up to the first $1 million in mortgage debt. There are also tax breaks when you sell a principal residence, such as an exclusion that may allow you to avoid capital gains tax on net proceeds of $250,000 if you're single, or $500,000 if you're married and filing jointly. If you own and sell commercial property, you may be able to avoid capital gains if you reinvest proceeds in a similar type of property. And investment properties can earn tax breaks through depreciation or writing off wear and tear on the property. That being said, we know that every coin has two sides, and so does investing in real estate. Among the downsides is that real estate investment can be more work than stocks. While purchasing property is easy to understand, that doesn't mean the work of maintaining properties, especially rental properties, is easy. Owning properties requires more sweat equity than purchasing stock or stock investments like mutual funds. Also, real estate is expensive and highly illiquid. Even when borrowing cash, investing in real estate requires a large upfront investment. Getting your money out of a real estate investment through resale is much more difficult than the point-and-click ease of buying and selling stocks. Thirdly, real estate has high transaction costs. A seller can expect to pay high closing costs, which can take as much as 6 to 10% off the top of the sale price. That's a hefty cut compared with stocks, especially now that most brokers charge no fees for stock trades. Additionally, it isn't easy to diversify your investments with real estate. Location matters when investing in real estate. Sales may slump in one area while values explode in another. Diversifying the purchase of real estate properties by location and type requires much deeper pockets than the average investor has. And finally, the return on your investment isn't a sure thing. While property prices tend to rise over time, there's always a risk of selling a property at a loss. The 2008 financial crisis is a reminder of that. To be fair, this is also true of stocks. Investing in stocks is no different either. It has its merits and demerits. The first advantage is that stocks are highly liquid. While investment cash can be locked up for years in real estate, the purchase or sale of public company shares can be made the moment you decide it's time to act. Unlike real estate, it's also easier to know the value of your investment at any time. Secondly, it's easier to diversify your investment in stocks. Few people have the time, let alone the cash, to purchase enough real estate properties to cover a broad enough range of locations or industries to have proper diversification. With stocks, it's possible to build a comprehensive portfolio of companies and industries at a fraction of the time and cost of owning a diverse collection of properties. Perhaps the easiest way is to purchase shares in mutual funds, index funds, or exchange-traded funds. These funds buy shares in a wide swath of companies, giving fund investors instant diversification. Thirdly, there are fewer transaction fees with stocks. While you'll need to open a brokerage account to buy and sell stocks, the price war among discount brokers has reduced stock trading costs to zero in most cases. Many brokers also offer a selection of no transaction fee mutual funds, index funds, and ETFs. And lastly, you can grow your investment in tax-advantaged retirement accounts. Purchasing shares through an employer-sponsored retirement account like a 401k or through an individual retirement account can allow your investment to grow tax-deferred or even tax-free. On the downside, it's crucial to understand that stock prices are much more volatile than real estate. The prices of stocks can move up and down much faster than real estate prices. That volatility can be stomach-churning unless you take a long view on the stocks and funds you purchase for your portfolio, meaning you plan to buy and hold despite volatility. Also, remember that selling stocks may result in a capital gains tax. You may have to pay a capital gains tax when you sell your stocks. If you've held the stocks for more than a year, however, you may qualify for taxes at a lower rate. Also, you may have to pay taxes on any stock dividends your portfolio paid out during the year. And lastly, stocks can trigger emotional decision-making. While you can buy and sell stocks more easily than real estate properties, that doesn't mean you should. When markets waver, investors often sell when a buy and hold strategy typically produces greater returns. Investors should take a long view of all investments, including building a stock portfolio. To evaluate whether you should invest in real estate or stock, or both, you should consider the factors of market volatility, cash flow, diversification, management and transaction costs, liquidity, tax effects, and your own time and effort. There are pros and cons for each of these factors for stock and real estate investing. It ultimately comes down to your own preference for risk, your time horizon, and your investment goals. It's always important for investors to diversify their portfolios in an attempt to mitigate risk and maximize their rewards. A combination of investments offers investors a great way to do just that. Therefore, the real estate versus stock market debate isn't really a debate at all, but rather a conversation each and every investor should have with themselves. In doing so, investors should weigh the pros and cons of real estate versus stocks to choose the strategy that helps them meet their own goals. Is your own portfolio diversified between several different investment vehicles? Which asset class do you wish you had more of? Please feel free to let us know in the comments below.